Let's talk about Veritas, which is
Ventas.
Ventas. Veritas is something else. Ventas, sorry about that. It is a REIT. They're in the healthcare facilities. Now, I thought you said they were a senior. They're put in the healthcare facilities area.
I guess healthcare facilities, yeah, but they focus on senior housing.
Okay, well, senior housing, so I guess that could be healthcare. Short on the float, only 4.4%. Not a good PE ratio here. And again, we do talk about FFO, funds from operations. This is PE ratio. I don't know if you'll have the FFO or not, but
I do.
Oh, good. PE is 158, very high, but price to sales 5.6, better than the industry at 7.1. Price to book value 2.9. That's tangible book value versus 10.6. That's a positive. Price to cash flow 19.5 versus 21. PEG ratio very good, 2.6 versus 39. Now over the last year, no growth on the earnings. Industry was up 143%. Sales for the company were up 12.5%. Industry up 38.1%. Now, this is why we'd want to look at this. The 5-year earnings per share growth estimate from the analysts, 58.5% versus 7.8% for the industry. So this is a positive going forward. This could be something growing in the future as our population gets older. Disappointing, the dividends, only 2.8%. And the payout ratio, 413%. So they're not having a lot of profits. Again, we'll see what you have for the FFO there. Let's see. We do have the balance sheet. Current ratio 1, not as good as the industry at 3. Debt to equity 1.2. We're okay with that. 0.8 for the industry. Net profit margin 3.6. Not as good as the industry, 4.2. And then return on equity 1.7 versus 3. Free cash flow $947 million. What do you got going for it, Chase?
I just want to say, I mean, the big reason this is interesting, you kind of hit it already, but 4 million boomers will hit 80 years old in the next 5 years. And then obviously that should be a big benefit to occupancy at active adult and assisted living communities, which is kind of what we're looking at. But the supply side is also an issue. According to some numbers here that I saw, annual inventory growth in senior housing just dropped below 1%, which is the first time that's happened since the National Investment Center for Senior Housing and Care began tracking that metric in 2006. So there will be just about 4,000 new senior living units developed this year and next year, but demand growth would necessitate 100,000 new beds each year through 2040. I mean, they're looking at senior living demand pool is expected to be see growth of 28% over the next 5 years. So, I mean, supply is not keeping up with demand in this space. I'm like, wow, this could be a great opportunity. Maybe REITs haven't done so well, but I'm going to say, unfortunately, it does look expensive. This REIT has done well over the last 5 years. It is up about 62%. 52-week range here is $56.68. The high is $71.36, and the current price is $67.79. But unfortunately, we go forward for this business. We go out to December 2026. The FFO, or funds from operations, looking at cash flow for this business, is $3.77. Gives us a target sell price of $62.58. I was hoping we had something here, but it's too expensive.
And this could be like a growth investment, which doesn't really fit what we do. But, you know, we'll keep looking because I think it's a good area.
The growth is like decent, though. I mean, I know you mentioned earnings growth, but the FFO growth is about 8% a year. I mean, it's good growth, but not great growth. If this was something we could get around like 12 times FFO, I mean, gosh, this would be an amazing investment.
And maybe we'll see the price pull back to maybe 50 or something. I mean, who knows? We're in a crazy period right now, so we could see a pullback there.